now. Okay, guys. Well, welcome to the lesson for today. My name is Alastair. I am your conference teacher for the lesson today, and here it is, of course, in front of us on the screen: Financial English, understanding reports and key terms. Decipher financial language in English. Okay, so a lot of vocabulary and language today related directly to our subject of business. Okay, so I've got a message already. I won't be sending the PowerPoint in the chat right now, but at the end I will take email addresses and I will send it to you. But we're going to continue for now. Here we go. So we have 4 parts to our agenda. Number 1, the basics of financial reports. Number 2, key financial terms. Number 3, interpreting financial data. Number 4, financial communication. Okay. Hello there.
Hello.
Hi there. Welcome to the conference lesson. We're just going to keep our microphones off. I'm just going to turn that off. Thank you ever so much. But welcome to the lesson. We're just looking at the agenda for our business conference today. Now we're going to get started with agenda item number 1. Okay, so our introduction. Okay, money talks, but it speaks a different language. This presentation will help you understand the basics of financial English, how to read reports, talk about money matters, and use the right word with confidence. Whether you want to follow a meeting, write a report, or simply sound more professional, you're in the right place. Okay, fantastic. Okay, thank you very much for turning off your microphone. Okay, so let's have a look then at our first part, the basics of financial reports. So what are financial reports? Financial reports are formal records of the financial activities and position of a business, individual or other entity. They allow stakeholders to access performance and make informed decisions. They typically include quantitative data, e.g. numbers, ratios and trends, and qualitative notes, e.g. footnotes, management, discussion, the information that helps to interpret the quantitative data. Okay, well, let's think about the main types of financial statements. Okay, so we've got number 1, income statement. This shows revenues, expenses, and profit, also known as profit and loss statement or a P&L. Number 2, balance sheet. This is a snapshot of the company's financial position at a specific moment. So number 2, a balance sheet. Number 3, a cash flow statement. This is a statement that allows us to track inflow and outflow of cash into a business. And number 4, statement of changes in equity. Shows changes in owners' equity over time. Investments, retained earnings and dividends, for example. So there are some different types of financial statements. Once again, the income statement, balance sheet, cash flow statement, and statement of changes in equity. So let's think a little bit more about some basic structure and titles. So number 1, money in, revenue or sales. So money in relates to revenue or sales attained by the company. So this is the total money a company earns from selling products or services. Money in, revenue or sales. This is the total money a company earns from selling products or services. Number 2, cost to make the products, COGS, or costs of goods sold, or COS, cost of sales. This is how much it costs to make or buy the products the company sells. So costs to make the products, COGS, costs of goods sold, or COS, cost of sales. This is how much it costs to make or buy the products the company sells. Number 3, money left over. We have gross profit, sales minus the cost of goods, operating income, profit after subtracting business costs, and net profit, final profit after all costs, taxes, and expenses. So the money left over, the good stuff, the gross profit, GP, sales minus the cost of goods, operating income, profit after subtracting business costs, net profit, final profit after all costs, taxes, and expenses. Let's continue then with number 4, what the company owns and what the company owes. So what the company owns and owes. Assets. These are things the company owns. Assets. Things the company owns. Current assets. This is cash or things that can be turned into cash soon. Current assets, sometimes called liquid assets. Then we also have fixed assets. Long-term things like buildings or machines. These are assets that we can't readily liquidate into a current asset. Liabilities. This is the money the company owes. Now, we have short-term liabilities, must be paid soon, like in a year, for example. And we have long-term liabilities. These can be paid over a longer time, a longer, more structured period. Owner's equity. The owner's share of the business after paying all those debts. So the owner's equity. This is the owner's share of the business after paying all those liabilities and debts. Okay, well, we talked about some of these financial documents, but who uses these documents and these financial reports? Well, we've got a few different interested parties here. Number 1, investors. They use these reports. And why do they use these? Investors use these reports for decision making. Who else uses these financial reports? Number 2, managers use these reports. And why? Managers use these reports for strategic planning. Number 3, banks also use these financial reports. Why? They use them to give out either loans and also to make risk assessment on businesses. So banks use them for loans and risk assessment. A fourth group on our list for this part of the lesson is government agencies. So we have government agencies for taxation and regulation. So they might want to check some of our financial statements and documents for taxation and regulation purposes. Okay, so those are people who use these reports. So we're going to have a look at some vocabulary now. Okay, so number one, assets. Things the company owns. Cash, property, inventory. These are assets. Number two, liabilities. What the company owes. Loans or payables. These are the liabilities. Number three, equity. So the owner's share after the liabilities are deducted. The equity. Number four, revenue. This is the money generated from business activities. Revenue. Number five, expenses. This relates to the cost incurred in operations. Expenses. Assets, liabilities, equity, revenue, expenses. Okay, we've got some more vocabulary words here, so let's keep going. Number 6 on our list is net profit. This is the revenue minus all costs. Net profit. Number 7, gross profit. Profit after COGS, but before overheads and taxes. Gross profit. Number 8, fiscal year. This is the financial reporting year, and it's not always the calendar year, of course. This is the fiscal year. Number 9, amortization. Amortization. Gradual reduction of an intangible asset's value. Gradual reduction of an intangible asset's value. Amortization. Number 10, capital expenditure. Capital expenditure, or CapEx, relates to investment in long-term assets. Capital expenditure, CapEx. Okay, we've got net profit, gross profit, fiscal year, amortization, capital expenditure, or CapEx. Well, we're going to continue now and think about some key financial terms. So what makes a term key? What makes it vitally important? It appears, a vital or key term, it appears in almost every financial conversation, email, or presentation. Knowing these key terms helps decode annual reports, earning calls, and budget meetings. So very practical for us on a day-to-day business sense. So let's check some key terms. Here we have some. Number 1, turnover. Now this relates to the total sales made by a company, the turnover. Number 2, the overhead. This is the general running costs, for example, rent and salaries. The overhead. Number 3, our break-even point. This is where income equals expenses. The break-even point. Number 4, inventory. This relates to all the goods a company has to sell. The inventory. Number 5, accounts payable. This is the money that the company must pay. So we've got 5 key terms on this screen: turnover, overhead, break-even point, inventory, and accounts payable. Let's have a look at some more. Okay, so we've got a second screen here with some more key terms related to our lesson. Number 6, accounts receivable. So this relates to money customers owe to the company. We like accounts receivable. Number 7, operating costs. Regular costs to keep businesses running. So a business has operating costs, and these are the regular costs to keep it running. Number 8, budget. So a budget relates to a plan of income and expenses. What do we plan to receive and what do we plan to pay? Of course, a budget is a vital part of any successful business. Number 9, a forecast. Okay, so this relates to the future. We use a forecast to predict future performance. Of course, we need realistic forecasts in order to be sustainable. Number 10 on our list of vocabulary words is stakeholder. Stakeholder. This relates to a person affected by the company. Could be investors, could be employees, it could be customers, could be employers. Of course, there are numerous stakeholders in business. So let's have a think about those 5 words once again. Accounts receivable, operating costs, budget, forecast, stakeholder. All key terms. So we're going to move on to the next part here, which is all about interpreting financial data. So how to read data. Okay, so financial data isn't just numbers, it's a story. Now there are some common questions. Number 1, are we growing? Are we growing? Number 2, are costs too high? Are costs too high? Number 3, is the business healthy? Is the business healthy? Number 4, are we making smart investments? Are we making smart investments? And number 5, is our cash flow strong and sustainable? Is our cash flow strong and sustainable? So sometimes we need to talk about trends, and quite often we can use verbs and adverbs to describe change in trends. So we've got some sentences that combine verbs and adverbs to help us talk about trends. For example, number 1, profits dropped sharply after the merger. Profits dropped sharply after the merger. Number 2, customer numbers fell dramatically in June. Customer numbers fell dramatically in June. Number 3, expenses grew gradually over the quarter. Expenses grew gradually over the quarter. And number 4, market share declined significantly last month. Market share declined significantly last month. All of these sentences using verbs and adverbs to describe change. Dropped sharply, fell dramatically, grew gradually, declined significantly. Okay. So here are some more verbs that can be very useful to us when we're talking in business language. Number 1, rise. Number 2, increase. Number 3, grow. Number 4, improve. Number 5, peak. Number 6, fall. Oh. Number 7, drop. Number 8, decline. Number 9, decrease. And number 10, recover. Okay, so I'm going to read through that list of 10 vocabulary words once again. Rise, increase, grow, improve, peak, fall, drop, decline, decrease, and recover. Okay, we can also use adjectives as well to describe the state of a business. And in our business language, of course, we have 8 useful adjectives here. Let me read through our list. Number 1, slight. Number 2, moderate. Number 3, significant. Number 4, sharp. Number 5, dramatic. Number 6, steady. Number 7, gradual. And number 8, rapid. Okay, I'm going to read through those 8 adjectives once again. Here we go. Slight, moderate, significant, sharp, dramatic, steady, gradual, rapid. Okay, well, we're going to use some vocabulary words that we've looked at there, and we're going to use them in some example sentences. We have some here as phrases for presenting data. So have a listen to our example sentences. Number 1, we saw a steady rise in revenue. Number 2, costs remained stable during this period. Number 3, there was a slight decline in customer growth. Number 4, profits dropped sharply after the price hike. Number 5, we experienced moderate growth in new subscriptions. Number 6, there was a dramatic increase in website traffic last month. We also have some vocabulary for you to help interpret reports as well. Let's have a look at these. We've got 10 words on the screen. I'm going to read through these. Here we go. Number 1, trend. Number 2, fluctuation. Number 3, growth. Number 4, drop. Number 5, steady. Number 6, performance. Number 7, figures. Number 8, margin. Number 9, increase. And lastly, number 10, comparison. Trend, fluctuation, growth, drop, steady. Performance, figures, margin, increase, comparison. Okay, well, let's move into the final part of our lesson today, which is all about financial communication. So we've got some common phrases in business meetings here. So have a listen to these as I read through our common phrases. Number 1, let's look at the figures. Number 2, our forecast shows growth in this period. Number 3, can we reduce costs without affecting performance? Number 4, we're expecting a higher return on investment. Number 5. Shall we move on to the next item on the agenda? Number 6. I'd like to hear your thoughts on this proposal. Okay, and we've got some useful phrases we could use when writing financial emails. So let's have a listen to these phrases as I read them out too. Number 1, please find the quarterly reports attached. Number 2, here is the brief overview of our financials. Number 3, let me know if you need clarification. Number 4, attached is the financial summary for this period. Number 5, please review the updated budget proposal. And number 6, if you have any questions, don't hesitate to reach out. Very important. Okay, guys. Well, we've also got some phrases for presenting reports as well. So have a listen to these. Number 1, this chart highlights our performance this year. Number 2, we can see a strong recovery from last quarter. Number 3, cash flow improved due to better cost control. Number 4, revenue trends indicate consistent growth over time. Number 5, the data shows a sharp drop in operational expenses. Number 6, we've seen a steady increase in customer retention. Okay, lots of very useful phrases here. So we are coming towards the end of our conference lesson today. So we have a conclusion before we do finish. So here it comes. In conclusion, understanding financial English is not just about numbers. It's about reading between the lines, speaking with clarity, and making smart decisions. By learning the structure of reports, key terms, how to interpret data, and communicate effectively, you've taken a big step towards financial fluency. Okay, well, there we go, guys. Please keep practicing and stay curious. Let the language of finance become part of your everyday language toolkit. Okay, guys, well, that is it for today. I do hope you enjoyed our lesson. Myself and everyone at Circle It Along would like to thank you for your attendance in today's conference lesson. It's an extremely interesting topic, and I hope you are all able to take lots away from it. But it is time to say goodbye. So, guys, have a great week, and I will see you next Monday. Take care. Bye-bye.